let us now cover Microsoft, the bane of my existence. But to be fair, you did have a chance to buy this thing under some $400 just a few days ago. How many of you did that? Let me know in the chat or in the comment section, because that is that's tremendous. By the way, shout out to the 10 of you watching right now on the Rumble side, guys. Shout out to the 7 of you watching on the YouTube side. Really, really do appreciate
Microsoft
all of you.
literally,
What's up?
from the recent low, right? So when it was 350 to now, it did 21%
Yep.
in a week.
In a week. Let's see.
Jesus.
At least on my 5-day, I'm seeing. Yeah, hit what, 355 roughly?
It's 10% away from all-time highs.
Yep. And we just did 7.63% today.
That's
so
insane.
You know, most likely if tomorrow's jobs report comes in great, then
another 2-3%.
I think we're gonna see 500, maybe.
No, you're not gonna see 500.
You're not gonna see 500. All right. But yeah, guys, next we got Microsoft. They also had earnings yesterday, and Microsoft jumps as Q3 result. They are in their Q3, they're not in their Q4. Results show 33% Azure surge.
But yet AI is dying.
Good Lord. Outlook remains strong. Wow. Microsoft shares jumped 8%. What was that?
I'm going to keep beating this horse.
Honestly,
Who do they buy the chips from?
Microsoft has become the stock that honestly you just don't bet against.
The top 5 are literally don't bet against Apple, Microsoft, Nvidia, Amazon, Apple, Meta, Google. Like, you're literally just handing the market free money.
Yep. Shares jumped 8% during post-market trading on Wednesday after the tech giant closely monitored Azure revenues increase more than the market anticipated in its third quarter of fiscal 2025. The company expects its cloud and artificial intelligence business to remain strong, even though Copilot is like the third biggest one. It's still doing pretty good by just competition in general. So the company expects its cloud and artificial intelligence business to remain strong in the fourth quarter and into fiscal 2026. The good thing also about Microsoft is that they can incorporate all of their AI into their laptops, into their Windows, into Windows. Similar to, like, remember back in the day,
they already do.
Remember back in the day with Windows 10, they had Cortana from Halo.
Yeah. That was like the early like inception of AI.
And Amazon has their Alexa, basically AI, right? Basically.
Yeah, it was the stepping stone. It was the stepping stone for them.
Azure Q4 revenue growth is expected to be 34 to 35%, driven by strong demand from our portfolio services. So let's actually just jump into their actual earnings. Microsoft GAAP EPS of $3.46 by 24 cents. That's huge. And look at that revenue beat, though. Look
almost
at that.
2 billion. Jeez. 1.62 billion beats. They were like, we wanted a nice round number, and the nearest round number was 70.
Year over year, 13.2% up. Massive. Revenue and productivity and business process was 29.9 billion, increase of 10%. All of these numbers are double digit. Basically, all of these numbers they're double digits where it's important to be double digits.
It's like, notice what's oddly missing from all these earnings reports, talking about foreign currency headwinds.
Wonder why
the dollar fell off a cliff.
Right. So revenue increased. Revenue, productivity, and business process up 10%. Revenue and intelligence cloud, 26.8 billion, increase of 21%. Revenue from PC computing, this one, it's PCs. That's not their core business. Up 6%. I like how they did not include Xbox in here, though. Microsoft will provide forward-looking guidance in connection with the quarterly earnings announcements in its conference call. So they're basically going to have more. They usually do. They usually talk more during their conference call. But if I'm not mistaken, that's it. That's all I have. Okay. I guess we didn't have much of anything else. Regardless, though, it was enough to bring up the stock 7% post-market. Really, really good. So with that, let's just jump into this. We got the ticker for MSFT. Market cap. Please read me the market cap.
3.162 trillion.
Wowzer. Market share price of $425, up today 7.63, $30.14. PE of 33 points, basically. This one's looking a little bit expensive from a PE perspective. They do pay the dividend of $3.32, which becomes almost $25 billion in dividends being paid every single year. Take their 10-year average free cash flow, subtract this, they're still left with a little bit over 52. They're still left with $22.6 billion, which is a payout ratio of 52.21%. And do the same math with their last year's free cash flow, 44.7. It actually falls down to 35.58. What does that mean, Mike?
Sorry, I wasn't paying attention. My bad.
Basically means that they can afford to increase his dividend and continue to pay it. All right. Now, price to free cash flow, 45.59. 10-year average, 31.39. What does this mean? I get that it means that it is overvalued from a price to free cash flow perspective, but in just technical terms, what does it mean?
It means that their price is going up while their earnings is not catching up with it.
Not while their earnings, but while their free cash flow is, maybe it's not that it's not increasing, it's just not increasing at the same price that the free cash flow is in comparison to the 10-year.
It's not inflating at the same rate as their price.
Price of sales looking at 11.71, and net profit margins, what did I say? 35.79%. So, yeah. Looking now into their fundamentals. I think I'm not going to have to change much of anything here because we got 2015 of 12.2 billion to 2024 of 88.14 billion, 693% increase. I'm actually going to change this to, once I change this to a 95%. If I could change it, because my keyboard, for some reason, now it's just not working. There you go, 95%. What's your grade?
100.
Want to keep it out? You want to put that 100? All right.
Yeah.
I increased mine to 95%, though. That's just me. Next, we got the free cash flow. This is basically a stair-stepping free cash flow, which is what I like to call it when it's basically perfect. We got $23.7 billion to 2024 of $74.1 billion, increase of 192%, with an average of $47.27 billion. Aside from 2023, because remember, they are on an off year, right? They just had their Q3. So really, this 2023 may have possibly been their 2022, right? So just understand that.
Same grade.
Yeah, I'm actually going to give mine to, I'm going to give mine, honestly, to keep it at 95%. I like it. It's just, the dip is the dip, but it's not that big of a deal. Next, we got the revenue. This is nearly perfect, right? This is nearly perfect. The one small dip was 2015, 2016, a dip of around, what is that, $2 billion or so? But when going from $93.58 billion to 2024 of $245 billion, that is an increase of 188.53%. Keep it 100?
Yep.
Keep it 100, right? Yeah. Assets, you guys can see, increasing very, very nicely. Liabilities also increasing, especially as of the last 2 years. Explainable, AI, right? Nothing really to see there. This looks perfect. This looks fake, basically, right? Especially going from like 2018 to the trailing. It's looking absolutely gorgeous. Average total assets of 332 billion, liabilities of 182 billion, a difference of almost 150 billion dollars in the positive. 100%, right?
Yeah.
We're not going to have to change much of these because this is really good. Look at this, though. We may have to change this one. Cash flow minus liabilities decreasing, then it stayed flat from 2018 to roughly 2022. As of recently, they are going lower. However, again, innovation. They also have done a lot of acquisitions as well. Oh, that's actually probably what that 2023 was, because they did buy Activision.
That may have been their dip. OpenAI. They're investing in OpenAI as well. So,
and they're also right, and they also got their Copilot too. So I understand that, it's not as good as Meta was, but what would you give this as a grade?
I would say 90.
Yeah,
because all their other fundamentals are extremely strong. Like, they're just killing it everywhere.
I'm gonna go with a 90 as well. And honestly, I can't really fault them for innovating. Like, you should see this. You should see this.
Yeah. You should reward companies for innovation.
Boom. Bingo. And shares outstanding. Look at this. These shares outstanding look absolutely gorgeous. Very consistent. So why do I absolutely love this metric? Do you see why?
Because it's just flat line down. They're basically not devaluing your shares or diluting you while they're capital appreciation's going up. They're buying back as their stock price is going up.
Yes and no. We got 8 billion shares to 7.4 billion shares, a buyback of 7.39%. However, previous year to the current year, an increase of 0.03%, basically zero. But the reason why I really do like this is because that trend line hits those graphs almost every single time. That means consistency. That means that when it comes to projection, we can assume the same kind of thing in the future, right? It's all about just projection. So easy 100%. Not really going to change it. And lastly,
It's like how investors like certainty. It's
exactly.
like it gives you a higher degree of certainty.
Exactly. Cash and equivalents as of 2024, $18.3 billion. Average, $15.15 billion. I mean, we really didn't change much. I think the grade even, actually, it's about the same, 97 and 99 for you, good sir.
Literally the same grade for you, and mine went up a bit.
By one. So, yeah. It's Microsoft. You guys know, it really is nothing else to say here. The main thing is, of course, valuation, right? Valuation. So what in the world are we going to give this company for valuation-wise? Let us take a look at this, and let's see what the discounted free cash flow says about it, shall we? So let's just delete all these numbers because this was for Meta. Here we go. All right, Mike. I like these numbers. You see this? This is fair.
Yep.
I like this. I really like this. So what do you think?
10, 12, 14.
10, 12, and 14. All right. Okay. Free cash flow?
10, 12, 14.
10, 12, 14. I love it. Love it, love it, love it. 10, 12, and 14. And now share change? You could put decimals, it's fine. You could do decimal.
They were doing 7%, right, over the course of 10 years.
But the average year over year has been around a little bit more than 0.75%.
Okay, so 0, half, and 1.
I like those numbers. 0, half, and 1. Okay, and now for the discount rate, for that, we're going to go to Grok one more time. And now we're going to do MSFT. And Grok is telling me a discount rate of 10, if it lets me type it, 10, 8, and 6. Look at those numbers. Woo, look at those numbers. And a terminal growth of 2, 3, and 4. So 2, 3, and 4%. And look at what we got, guys. This is very interesting. Very interesting. Wow. $248 to $1,468.80 with a margin of safety of 5, 10, 15, 210, 79 to basically 1,400. Guys, we just had this under 300. We were at like more, like, look at this. The median, we're basically right now at the 10% margin of safety for the median, which really the median is what you want to aim for, because that is like the one that has been the most trend lined. So
it's the line of best fit.
Right. It's the line of best fit. So even with this, it's still looking like a buy, meaning if you bought this thing sub 400, you are like in the best position possible. That is incredible.
You're not paying a high enough premium that it's requiring you to gain further capital appreciation to offset that premium, but you're also not buying it like at so low price where you're actually questioning if the fundamentals are like still valid, right? Because like if it falls to 210, and then the natural question is like, if it goes lower than 210, is it actually still valued at that point? Is something fundamentally changed that you don't necessarily see? And is it like concerning, right? Being, like you said, in the line of best fit is where history has trended, and it's going to then take further deviation to make it not trend in that line.
Correct. So looking really, really good, guys, in general, when it comes to Microsoft, even right now, even though it's gone up, right, it's still looking like a great buy. And that $478, why is that number special? If we take a look back at their 52-week range, what is the high? 468. Oh, look at that. So yeah, it's interesting. Now, when it comes to their dividend, putting in $6,215. This nets you around $48.50. Again, you don't buy Microsoft for their dividend, you buy Microsoft for Microsoft. And with that, Mike, you want to do your technical analysis, my good man?
Yeah. So talking about
Hang
Microsoft.
on. Give me 1 second. All right. Good to go.
So, like we talked post my pre Microsoft earnings video, I basically said you're above the 50. You're looking like you could really stomp out earnings, and I said you could easily gap above the 200 and actually retest. If you missed out on Microsoft, I would look for that 200 retest. It could definitely happen. You're only from the closing price down 2%. So a single bad day on the S&P or the Nasdaq can result in the Microsoft retesting around 414. Don't necessarily look at like I have to get at 414. Any price point between the current price and the 200-day moving average is an excellent buying opportunity to scoop it up, even though you've missed out on like really discounted prices down here. It's now going to start trending back up. The 50-day moving average, you're going to look to start seeing it curl back up, and that will signify further capital appreciation. So you can dollar cost average up. Also, Microsoft is above the yearly close of 2024, meaning it's actually appreciated more than the previous year, resulting in further expansion. That's what we want to see. We want to see companies expanding further year over year, right? The 12-month, even though it is a pretty wicked candle, right? So the year engulfed the entire range of 2024. We've already done 2024 reset on Microsoft, came back to the high of 2021 and also 2022. So essentially, that's where we pivoted on Microsoft right at the 2021 high. That is a significant pivot point, and thus where Microsoft found its bottom and most likely is heading towards new all-time highs. Just based on this, it's in this area right now where there was previous price consensus. So the bottom end really is that 414 number. Again, it goes back to I would be buying any drop on Microsoft right now, especially after its latest earnings, and be looking for new all-time highs on it.
All right.
That's
All right.